U.S. existing home sales numbers came out earlier this week, and there was a significant drop as the numbers hit a 13-year low, falling 4.1% in October and 14.6% year over year. Mortgage rates also slumped a little over 7% from the prior week, with our next guest saying that it's stirring up buying interest and that housing inventory is set to improve after this winter and heading into the spring. And with more inventory available, there will be more home sales. Let's bring in National Association of Realtors Chief Economist Lawrence Yun to dig into what we can expect from the real estate market. Happy Thanksgiving weekend to you, Lawrence, and always great to get some of your perspective here. Put some of the context on this data here for us, because when we compare it to years and even a decade plus back here, it doesn't look too good.
Well, good morning. We are in a very unique housing cycle where homeowners are unwilling to list their property because they are locked in on those lovely 3%, 4% mortgage rates. They're all smiling. Their monthly payments are low. Their housing wealth has risen greatly. But the challenge is that with higher mortgage rates, it's really hurting the first-time buyers from entering the market. First-time buyers comprising less than 30% of all transactions. It should be closer to 40% in normal circumstance. So we have a divided market. Homeowners doing well, yet the potential home buyers, renters who want to be the part of the ownership society, are struggling to get into the market.
Lawrence, what are your expectations for mortgage rates now that they're lower here for 4 weeks in a row? How long do you expect that trend to continue? What do you think the likely range is as we look ahead to 2024?
The mortgage market has pivoted already ahead of the Federal Reserve. So the mortgage rate were 8% just 4 weeks ago, but we have seen 4 straight weeks of mortgage rate decline, now going towards 7.3%. And I believe that this trend will continue such that we will be in the 6% mortgage range in spring of next year. And also the Fed has to remember, there's a little hurt in the commercial real estate. We don't want to have another situation of Silicon Valley Bank. So whether or not the Federal Reserve would want to help the community bank by lowering interest rate, that will be interesting to observe in the coming months.
Now, how is what you're saying in the existing home market juxtaposed against the new homes market as well? Because, I mean, one of the interesting things that we've heard about in earnings calls from companies like KB and like Toll Brothers even is that they're doing this practice of speccing, which is essentially, putting the foundation in on a home, not having a buyer yet, but anticipating that there will be a sale at a future date and that, kind of if you build it, they will come. So, how does that impact then the existing home side?
Well, I'm glad that the home builders are building more homes. In fact, home builders' home sales this year is up 5% from 1 year ago, year to date. So the builders are doing very fine, and they are taking advantage of the fact that lack of inventory. Builders can simply create inventory. Those spec homes, build it. Now, initially, there may be some buyer pullback, but what the builders are finding out is more inventory, more home sales. We're also seeing that on the existing home sales on the upper end. Anything that is priced above $750,000, we have more inventory this year compared to last year, and consequently, we have more home sales. So it's not only mortgage rates, but it's the inventory availability that will determine the direction of home sales. So let's hope that we have more inventory coming onto the market as we go into next year.
When you talk about more inventory coming onto the market, I guess how much of an increase, Lawrence, are you expecting to see?
If we had doubling of the inventory, the market can easily handle that, but we don't anticipate such a big increase. But even at the margin, as the mortgage rate decline, I believe there are many pent-up sellers. That is to say, people who have additional child in the family, looking for better school district. And let's remember, in the past 2 years when the homes were not being listed, there were 50 million job switches across the country, which means that 50 million Americans may be in a wrong commuting direction. So I think they will begin to say, I have to make the next move. I want to list my home and get closer to my job. So I anticipate increase in inventory come next year.